Well, one of the standout charts of 2024 is Bitcoin, with a huge move. Part of that was tied to the launch of some big spot Bitcoin ETFs in the United States. Along the way, on the rally higher, people talked about a big event, which is actually fast approaching. And speaking of ETFs, a reminder that we did see crypto ETFs rolled out in Canada before we saw them hit the U.S. market. Purpose Investments, one of the early leaders on that front. Som Seif is the CEO, and he joins us again. And first of all, on the crypto story, what have you made around the performance, the discussion of crypto this year?
Well, I mean, it's pretty amazing to see, how the price in the last, not just year to date, which is up like 65% for Bitcoin, and Ether is up a little less, but even last year where it was up, over 100%. And a large part of that is because, sentiment and sentiment changes and shifts, as you know. What's been really interesting is that we have seen most of that sentiment shift in the institutional market versus in the retail market. And so only in the last, I'd say, couple of months where we've seen retail start to really shift, where they've become much more buyers and utilizers of this, which is actually really an interesting statistic, because usually retail will lead some of these things. Look, I think that some of it is in anticipation of just, what's happening around, some of the structural and technical things, so the halving, but also the ETFs launching. But a large part of it does come down to, the market will have a view on price based on, what their sentiment is, but what's actually fundamentally shifting in the underlying of the core of the platform. So how is utilization and usage of the network of Bitcoin, how is it becoming more and more of a core asset or a principal asset of your ownership within portfolios? How does it get utilized that way? In Ether, how does the network of DeFi and other things basically grow? And that has been, if you've been a tracker of this, has been year over year over year consistently growing. And that's what, is a really important thing for people to step back and pay attention to. Price will gyrate a little bit based on, sentiment, but what is actually the utilization of these assets within their core usage, and that's pretty exciting to watch.
Does the fact, though, that there's just been this flag planted of big Wall Street firms that were always kind of hedging their comments on cryptocurrencies that now literally have products associated with it, is that?
No doubt. Yeah. I mean, it's, in my opinion, when you have these assets that are on the fringe, what you really want to be paying attention to is how they go from the fringe slowly more and more into the core. We saw this in gold, many years ago, where gold was always an asset. It was sort of on the fringe, people used it. But as the ETFs came and became more and more of a utilization tool, you saw more and more people see it as a valid asset within portfolio construction, and other things. And so that became a very robust underpinning for why, of course, gold has become so powerful and been a great asset. It's the same thing in Bitcoin, you're seeing that. In Ether, it's slightly different. You have to really be paying attention to the underlying technical product and the platform and its utilization and development in things like stablecoins and decentralized finance models and all the rest of it, which are really fascinating to watch. That's really where the Ether value will ultimately grow over time.
Okay, and then the other thing, because you mentioned gold, it's very difficult to gauge how much of the market is leans into macro. A lot of it does. But you hear people talking about, we got a budget in this country next week. We're running big deficits. A lot of countries are running huge deficits right now. And there is a broader concern about fiscal stories worldwide. And so you sometimes hear part of the gold story is associated with that. Part of the Bitcoin story is part of that. It's pretty hard to quantify.
Yeah, I don't profess to that. We did a lot of work on gold many years ago, and around its sort of inflationary hedge, and really the only time we ever saw gold act as an inflation hedge when we saw hyperinflation. I'd say more than anything else, it's an asset where ultra high net worth and high net worth individuals who have large assets will look at using gold or Bitcoin now more and more as a tool to diversify their assets away from traditional fiat, but not because they're worried about inflation. It doesn't actually correlate to that. It's just because sentiment will shift to say, I want to own something other than this. Yeah. I don't profess to, I'm not a big doomsday believer in all this stuff. I do see the trends of, debt and at the government levels and, globally and the individual levels, the corporate levels, all that stuff is being troubling and very much issues, especially when we see high interest rate and inflationary risks. Yeah. And that could have impact over the long-term trends of currencies, but I don't see that as the reason why you buy gold or Bitcoin today.
We're almost out of time, but for you guys, like the experience of being early with rolling out crypto-related ETFs, net, was that a big positive for you?
I mean, we were one of the largest in the world. We're still one of the largest in the world, and I would say in assets and ETF management. But it comes because as a firm, what I've always believed in is you got to be thinking about where the markets are going, where the business is going 10 years from now, because other people will start to wake up 5 years from now, and then you're ultimately well in advance. And we've done that consistently at purpose and in everything I've ever done.
Okay, so since people are going to have to learn more about these various asset classes, including crypto, very quickly, can you give us the short version of the halving, how that works? You've talked with us about it.
Very simply, think about it as production costs of or value gained as a miner. And so mining is basically call it the tool that basically makes sure that the system and the network basically operates and validates. And that is the value for a miner goes down in half. So they actually have to earn more to basically ensure that they are willing to do the job because their costs and everything are embedded in there. So the fair value of their job, that means the fair value of price should go up.